Good morning, ladies and gentlemen, and welcome to the Bucharest Stock Exchange. We are more than happy to host a special event, Ring the Bell event, of course, and after the main speeches of our distinguished guest, the capital markets prospect in the context of European trend, it will be a very, very interesting panel for sure. We are honored to host this event together with the European Federation of Financial Analyst Societies and the local Romanian chapter, Romanian Financial Banking Analyst Association. I want to congratulate both the association especially for the yesterday 15th annual conference organized by our local chapter of the premises of National Bank of Romania. National Bank of Romania, we can consider her like the godmother of Bucharest Stock Exchange. We stayed there for 8 years between 1995 and 2003. So it's let's say a natural step to be here after the National Bank. Our special guests are members of the Executive Management Committee of the European Federation of Financial Analyst Societies and also the representatives of local chapter. A few words about the European Federation of Financial Analyst Societies, which was set up in 1962 and now is the umbrella of an organization of 14 national and local society of investment professionals in Europe, representing more than 18,000 financial analysts, asset managers, pension fund managers, corporate financial specialists, risk managers, treasurers, and of course other professional profilers in the investment profession. Romanian Financial Banking Analyst Association also brings together analysts from the banking sector, pension funds, investment management companies, insurance companies, and also on the capital markets. And I am proud to say that I am also a member of this association. I would like now to invite our CEO, Adrian Tănase, to address his introductory remarks. Adrian, you have the floor.
Good morning. I'm very honored to open this event and very honored to join and to receive you in our premises. European Federation of Financial Analysts Societies. It's an honor for us to host you today with, I think, 3 events, including the ceremonial events, let's say, and the panel which will follow. It is very important for us. It's a very good synchronization in some events which will follow in Romania. And again, I'm very happy for this and for the very high attendance and interest for the event. We have a very strong collaboration, the local financial analyst association, FABR, and I want to congratulate Daniela for the whole effort she is doing. It's a very important collaboration for us, and those educational initiatives for us are crucial and we have a high priority on this. We have a lot of educational projects as a stock exchange, and this one is one of the most important because I think the efforts to educate the financial community in Romania is the most important project in the long term. You have also short-term projects, infrastructure projects. We want to establish a central counterparty in Romania, but in the long term, I think those educational and the efforts to improve the quality of our and the qualification of our community, financial community, is the most important. FABR has done, as I said, a lot of efforts into this. They have bring the 3 certificates in Romania, and you have hosted them when they have bring 2 of them. The certificate of International Investment Analyst and the certificate ESG Analyst. And yes, again, Daniela, yes, we are very, very happy to have this collaboration. After the ceremonial ring the bell and opening symbolically the transaction day today, will follow a very important panel, a very interesting panel, capital markets prospect in the context of European trends. It's as I said, it's a very nice synchronization. It's a lot of important events which has happened in the last 3 years, globally and also locally. Globally, of course, COVID and this crisis we are facing now. And yes, it's very important to find out your view on this. And locally, more positive ones, I would say, at least regarding the capital markets evolution. You have been promoted as the most important is that you have been promoted as secondary emerging market by FTSE Russell. We have now initiative to become an OECD member as a country. Yeah. And of course, the biggest event, the most important event which will follow in the next weeks is the Hidroelectrica IPO. Yeah, Hidroelectrica, it will be the biggest IPO in Romania, which has ever happened in Romania, and one of the biggest in the region, and one of the biggest globally, I always say, nowadays, and unfortunately. And yes, this is very important. This is very important. This is a very important transaction for us with many implications, and we are looking forward to have to further success of this deal. Again, congratulations, and yes, let's ring the bell. Yeah, okay. And afterwards, I will invite you to have this yes, gesture, and afterwards the event will go forward. Thank you very much, and congratulations.
Such a nice ceremony and such nice sounds, yes, of the bell. Now it's time to have some speeches. The first one will come from Daniela Ropota, who is the chairwoman of the local Romanian chapter. And now I would like to introduce her. More than sure you know her, but let me introduce her. She's a member of our local association since 2014. She was elected vice president for the period 2018 and 2020, and the president for the period 2020-2022, and now she is re-elected as president for the next 2 years of mandate. Daniela has 17 years of experience in the analysis of listed and also unlisted companies from different sectors of activity, including financial forecasts and valuations through the market approach and the income approach. She holds the Certified International Investment Analyst and also Certified ESG Analyst. From 2019, she is a Romanian Banking Institute Associate Lecturer on the Corporate Finance Specialty within the Certified European Financial Analyst Program. From 2021, she is an Envisia Board of Elite Associate Lecturer on the Business Valuations Specialty Also, from this year, she is an Envisia Associated Lecturer on the Corporate Finance specialty within the Certified International Investment Analyst. She is authorized by the National Association of Authorized Appraisers from Romania as an appraiser specialized in enterprise valuation. Of course, Daniela has a lot of articles and editorials about economic and capital market trends, and currently she carries out analysis, evaluation, and financial modeling activity as manager valuation and economics within PwC Romania. Daniela, you have the floor.
Thank you very much for this nice introduction. I'm very happy to be here with you. I'm very honored. I have written a few ideas to provide you the right coherency because I have great emotions today. So I start by saying that AFPR celebrates today, this year, 15 years of activity, while the European Federation of Financial Analysts has more than 60 years of activity. Together, we are here to provide you a global overview about capital markets trends. I would like to discuss today about the role of financial analysis, how accurate the analysis could be, and to what extent it could be replaced by robots. I think it's a very common subject nowadays. So firstly, financial analysis has a crucial role from a business point of view. Company needs to understand how the revenues and expenses have changed over time. What are the drivers of their increase and decrease? What are the results compared to the peer group? So financial analysis is needed both historically and compared with the peer group. Furthermore, companies need a budget in order to have a global vision over the potential turnover and expenses. Why? We need to have a good control of our finances in the context of our long-term objectives. So a good budget leads further to a proper indication of the value of the company. How useful are these forecasts if no one can foresee the future? A forecast contains only information at the date of the valuation and depends very much on the inputs. Before the exercise of estimation, you need to understand the whole business and industry, and every industry has its unique features. And the financial and economic context is changing very fast. I usually say that we don't have a crystal ball to predict the future. But this exercise of forecasting will help us get a better picture of what we have, what our goals are, and how realistic can we achieve our objectives. This will help us make investments and maintain proper control of expenses, which is the key to a successful business in the long term and a social gain for the entire society. When the puzzle is complete, we can find out the value of the company. Last but not least, could robots replace people in financial analysis? AI proves to be increasingly useful when dealing with repetitive actions, clear database, and predefined formulas to apply. My answer would be the same. A good analysis depends on the inputs in the formula, and these inputs must be very well understood and carefully chosen. Therefore, while AI could be helpful for a very high-level perspective, it is important to acknowledge that it needed a comprehensive understanding of the business and the right inputs. All in all, I think analysis can help the society to all levels, and I suggest that everyone consider acquiring at least a minimum knowledge. Before giving the floor to Mr. Zabalos, the President of European Financial Analysts, I would like to thank to AFPR members for their supporting for their support, and also to the FER founders who created the association, and to our partners and sponsors, starting with Bucharest Stock Exchange and going further with PwC Romania, Banca Comercială Română, member of este Group, BRD Societe Generale, Exim Banca Românească, Patria Asset Management, and the National Association of Insurance and Reinsurance Companies in Romania, UNSAR. All this being said, I invite Mr. Zabalos, Chairman of the European Federation of Financial Analysts, to join us in your applause.
I would like to introduce Mr. Zabalos. Just a moment, because I forgot my... It's okay. Thank you. Hopefully I will pronounce correctly. Mr. PhD Jesus Lopez Zabalos, who is the president of European Federation of Financial Analysts Societies, and also he is the chair of the Executive Management Committee. He is also the general manager of the Spanish Institute of Financial Analysts Training School also, independent board member and chairman of the audit committee of MAPFRE SV and MAPFRE AM. Jesus is a member of the boards of a Certified International Investment Analyst Association, ILPIPE, EFAS, and IATEC Spain. He is a member of the Madrid College of Economists since 1985, member of the European University Association for Community Studies since 2006. He has extended experience on money market, capital markets, industry, consultants in business and financial advisory. He is a certified expert in business valuation by the Spanish Institute of Financial Analysts, Madrid, 2008. In the last 33 years, he has been a usual lecturer and visiting professors in seminars and specialized courses in several universities and business schools, and also he is a PhD in management and business administration. Mr. Zabalos, please, you have the floor. Thank you.
Thank you very much. Good morning to everybody. You said very well my name. I understand it's quite difficult to say Jesus all around the world, but frankly speaking, thanks for the introduction, this kind introduction. So dear Mr. Tănase, CEO of the Bucharest Stock Exchange, dear Daniela, Chairwoman of the Romanian Association of Financial Banking Analysts, members of the EFAS board, dear colleagues, and of course, ladies and gentlemen. On behalf of EFAS, let me thank the Stock Exchange and the Romanian Association for giving us the opportunity to ring the bell. I have to say it was crowded of people, no? I have not really space to ring the bell properly, and share with you some thoughts on the role of the financial analysts and on the outlook for capital markets in Europe. Given that in a few minutes we will have the opportunity to hear the view of different experts on capital markets in the context of the European trends, I will focus my intervention on the role of the financial analysts and on the future as professionals. I promise you I'm not going to be a robot in the near future. In my opinion, the key question today, and perhaps the questions to be answered, and for which, in my personal opinion, there is not a clear-cut answer, is what is the fundamental analysis for the 21st century market? What is the value proposition in a context of the takeoff of quantitative analysis and artificial intelligence solutions? The interesting thing about this question is not only that its answer is decisive for the future for the financial analyst profession, which we represent, but also there is no answer, or at least I don't know one. The only certainty we have, and on which there is a clear consensus, is that the market's equity, fixed income, or commodities needs analysis to survive. An investor cannot make a rational investment decision without prior analysis of the assets in which he or she wants to take a position. Another possible way of approaching the problem is to ask ourselves what happens to companies that are not being analyzed. For this, it is enough to think about the theoretical effect that the lack of coverage on the stock markets, what we call orphan stocks, those that are not analyzed regularly and which are mostly small and medium market cap companies. The chain of the effects triggered by the lack of fundamental analysis seems logical, yet theoretical, and it is intuitive that not investor will put money in a business that does not provide information. However, beyond the theory, what happens in practice? The best way to analyze this is to look at the level of multiples at which large and small caps companies trade. Lower multiple in the small caps space, although partially explained by the lack of analysis coverage, is also due to first, a low capitalization, and second, a low liquidity. It is consistently observed in Europe that uncovered companies trade at a significant discounts to those that are widely covered by analysis. The methodology of fundamental analysis to analyze a company is a thorough and laborious process of research. This, I believe, implies that both sides of research, buy side and sell side, are still needed to make the investment decision-making process efficient. Moreover, at this point, two questions can be asked. Where does fundamental analysis add real value? And where should fundamental analysis become strong to ensure its long-term survival? In our opinion, the analysis should be strong where it really adds value, in the preparation of credible financial projections and therefore in providing information and adding value to investors. In this area, experience tells us that fundamental analysis is effective and its role is currently irreplaceable, and is not currently threatened by quantitative analysis solutions, which are currently incapable of integrating the strategic vision of a business into the estimates, formed through dialogue with the company's management, the vision of the sector, the macroeconomic situation, the market situation, etc. It is probably that there is still a need for an adjustment in the analytical capacity installed in the market, especially in the larger and more liquid securities where supply seems clearly excessive. But the need for the function understood as the elaboration of reliable financial projections is indisputable. Where, once the financial projections are given, the analyst inputs seems to us to be minor. Valuation can be reduced to the application of a mere procedure, and therefore it will be a perfectly automatable task. Regarding the challenge of ESG analysis for fundamental analysis, ESG has become more than just a hype or a political objective. ESG is already one of the factors that might affect the market value of a company. ESG is based on non-financial concepts which have always existed, but which, unlike just 10 years ago, today do affect the market demand for certain stocks, and there is an investor preference for companies with a better ESG position or rating. However, as far as fundamental analysis of companies is concerned, ESG today poses a difficult, even and uncomfortable questions. What to do with it? How to integrate properly in companies' valuation through the financial statements? We cannot forget that the concept of integrated reporting involves combining relevant information on strategy, governance, and performance in a way that reflects the business, social, and environmental environment in which a company operates. An important point to consider is that this approach contributes to value creation. The connection between the qualitative part of the information and the quantitative part is the bread and butter for analysts and investors to make an investment decisions. The question arises, as to how this broader approach will be reflected in the value creation and return of an investment. A company that applies transparent principles of corporate governance and environmental responsibility could be seen to benefit from a lower risk premium. At the risks of a potential impact on the performance of climate change, for example, are better understood, this could in turn be reflected in a more competitive cost of capital and therefore a better valuation. ESG certifications are of vital importance in resolving this problem. This explains the regulators like ESMA or IOSCO growing concern for the quality of these certifications, as they are the only way for the market to incorporate ESG into investment decisions. In conclusion, our view of the future of the fundamental analysis and the role of the analyst, and hence for us, will be as follows: a reasonable, optimistic future. In fact, I believe that the challenge for fundamental analysis is to continue strengthening its role. Incorporating ESG is a colossal opportunity for fundamental analysis, a very clear way of growth and innovation for fundamental analysts, and an intellectual challenge how to integrate ESG into fundamental analysis. Literally might be a Gordian knot, which in this case does not need to be cut, but untied. Thank you so much for your attention.
Thank you so much for your valuable insights, Mr. Zabayos. And now we are going to organize for the panel. I will invite the panelists for the panel, and I will present each of them. So please, the organization team, to help us with the panel and with the chair. Thank you. Thank you so much for being today with us and accepting our invitation. I would like to begin by introducing each of the panelists. So allow me to introduce Mr. Thorsten Müller, the Society of Investment Professionals in Germany. Thorsten is CIA, CFA, CFM, Lighthouse Corporate Finance GmbH, and also is the current chair of the local chapter in Germany. Mr. Müller joined the board of directors of the local chapter in 2018, where he was and he is still involved in the topics of capital markets union, SMEs, and ESG. He is also a proven primary market specialist. He is a member of the Commission for Company Analysis and the head of MiFID Regulation Working Group. He also co-chairs with Barbara Cohen the EFAS Capital Markets Commission. He is also a member of the Issuer Market Advisory Committee of Deutsche Börse AG. He's a banker, has a degree in business administration, and he rounded off his training with CIA. Hello, Thorsten, and thank you so much for being today with us. Our next panelist is Manuel Portada Costa, who is the member of the local chapter in Portugal since 2008 and has been president of the board of directors of the association since 2015, after being a deputy for previous 3 years. Since 2017, Mr. Da Costa has been a member of the board of the European Federation. Good to mention is that he is the first Portuguese resident to obtain ISFA's certificate of Chartered Financial Analyst, who completed in 1995 the CFA Diploma of Financial Analysis. He has an extended years of experience in interacting with several areas of financial markets, namely institutional investors, equity analysts, and real estate managers. In 2017, he was elected also as member of the board of European Fund and Asset Management Association as a representative of the Portuguese Association of Fund Managers. He is also a member of FAS TQC and a member of the Financial Analyst College of the Portuguese Economist Bar. He has lectured in several seminars and conferences in the last 25 years. He was also a teacher in several subjects for several years, including as an invited professor teaching financial markets and instruments. Thank you, Manuel, for being today with us. Radu Crăciun is the CEO of Romanian Commercial Bank Pensions and president of Romanian Private Pensions Association. He was among the founding members of the ROCA Romanian chapter, Romanian Financial Analysts Association, and also founder of Independent Directors Association, in which he was president and vice president respectively. He was awarded INSEAD's certified in corporate governance. He has more than 25 years in financial markets, area in which he held executive and non-executive position. He is an associate professor for MBA programs offered by the Romanian ASEBUS. He has been a guest speaker in Bucharest for visiting students for IMD Lausanne, Kennesaw University, Wirtschaft Universität Wien, as well as for the local universities. And also he has a constant presence in public economic debates via media channels or his bilingual blog. Radu, thank you for being today with us. The last but not least, Iuliana. Iuliana Mușat, with over 20 years of experience in capital markets. Iuliana has been involved in a wide range of transactions across various industries, including listings of large state-owned companies in Romania and sizable bond issues. Her portfolio includes successful IPOs for companies such as Transelectrica, Transgaz, Romgaz, Electrica, MedLife, Digi Communication, Sfera Franchise Group, and Purcari. She has also coordinated fixed income securities projects such as green bonds issued by Raiffeisen Bank, Libra Internet Bank, City of Bucharest bond program, and also subsequent refinancing. Additionally, Iuliana has been involved in mergers and acquisitions projects. She is an ACCA member fellow since 2002. After joining Raiffeisen Group in 1998 as CFO and COO of the local investment banking house, Iuliana shifted her focus to consultancy for capital markets and M&A project following the merger with the Raiffeisen Bank Romania. Now she leads the coordination of ACM and DCM business lines, utilizing her expertise to provide insights and guidance to clients seeking to diversify their capital structure. She has a dual education background in aerospace engineering from the Polytechnic University of Bucharest and finance from the Bucharest Academy of Economic Studies. Thank you, Iuliana. Thank you all. And now let's step into the discussions of our topics. We will touch, let's say, what you are doing at your local chapters. This is very, very important for us also to understand, of course, what's important for your perspective. Then we will go to see the current trends for the local markets, for the three local markets, Germany, Portugal, and Romania also. Current trends, future trends, and we will have also a common question at the end for all of you. Now I will go to Thorsten regarding the role of your association, which I suppose is very, very important from many perspectives. As we know, the role of capital markets is key for the allocation of financial resources throughout modern economies, and therefore to enable stronger growth and long-term development of the European economies. Can you tell us more about your local major projects of the association? It's okay, it's okay, it's good, it's working.
Yeah, is it?
Yes,
Oh, okay, fine. So in Germany we have 1,400 members within DVFA, so that is a bunch of people, and bulk of them are asset managers, of course, and financial analysts. And what we do is that we simply say our job is responsibility in capital markets. So we are looking at the structure of capital markets in Germany, and we try to figure out where is something going wrong. And then we point up our finger and come up with ideas how this could be improved. And right now we are working on a project which is called Corporate Governance Scorecard. So we set up, first of all, 3-4 years ago, for the top 30 companies in Germany, a corporate governance scorecard, meaning we have a scoring. And corporate governance, so far, a lot of rating agencies have been covering the E within ESG, so ecology and social aspects, but the G was not covered sufficiently from our point of view. So we did that, and we are getting more and more momentum. So rating agencies ask us for the data, which we provide now. And back in 2021, we then started with the next group of companies, so that we covered 100 companies within Germany. And now, last year, we extended that to 150 companies, going down to companies as small as roughly 1 billion euros in market cap. And the key finding is, the bigger the companies, the easier it is to collect the data. And we have a professor, Christina Barnier, who runs it academically, and she was complaining to me when she simply said, looking at companies with 3 billion market cap, 2 billion market cap, it takes probably 5 times more time to generate the data, because the data is simply not available. And therefore we have to be very, very aware that we do not put too much pressure on SMEs to deliver these data. And this was a key finding for me, that the bigger the companies, the more resources you put onto the ESG topic. And we have proven that, and we have to extend our budget for the small companies because data collection is so difficult. And we are talking not about really tiny companies. 1 billion market cap companies are still investable, that are proper companies, very well run, with a proper management. Everything is okay. But these companies are still lacking the expertise of providing the data. So that is one key project that we cover. The other one is, and it's very, very closely related to the European Capital Markets Union. In Germany, and I know that from the colleagues of Deutsche Börse, we have a very, very well-functioning market for blue chips, with high liquidity, international investor attention, but that probably is true for 30 companies in Germany. The remaining is then suffering from low liquidity. So it's not even investable for US pension funds, because they say, okay, the biggest company in Germany has market cap 150 billion euros. Apple has 2 trillion. So American investors look at liquidity somehow from a different perspective as we do. But the interesting thing is that Germany is good for big IPOs, high liquidity in comparison to all other countries in Europe, but we are really suffering in preparing small IPOs. And we have the strong conviction that innovation and job creation comes from smaller companies. And this is a weakness in the German capital markets. And I also see this weakness across Europe. And we really have to put an angle on SMEs in Europe. And let me just quote a few numbers. There was, back in 2000, the so-called Oxera report. That has been provided by, or it was mandated by ESMA, so our Securities and Markets Authority. And this is really interesting, and I really ask you to remember these numbers. And we are just, and that is the reason why we, Jesus and myself, we decided we want to set up, we draft a European Capital Markets Yearbook to understand better the structure of the European capital markets. So, on average, we have 7,500 companies listed in Europe. This may differ. Perhaps it's now 8,000 or 7,500. I don't care. The structural number is 7,500. 86% of these companies are smaller than 1 billion market cap. 86%. If we now move down, 74% of these 7,500 companies having a market capitalization of less than 200 million. And what do we do in Europe? We have MiFID II, and we make a big fuss about bundling research, and we have been advising ESMA very clearly that this is crap. They did it. And we have problems now covering research for the small companies because Europe, especially ESMA, they take care of the big marketplaces. This is where the high international investment attention is. But if we want to properly develop European Capital Markets Union, we have to have a sharp eye on SMEs. And it's not just the very tiny ones, it's up to 1 billion. Sometimes you even feel liquidity constraints with companies 2 billion market cap. And this is something we have to argue about. And we start this discussion in Germany because we are suffering from that. We had last year, before Corona, we had some 10 IPOs. This is nothing for an economy like Germany. And we need to discuss that on a European scale and bring it up to the agenda. Because it's such a big name, Capital Markets Union, but in the end, it's about job creation and it's about innovation and gaining competitiveness. And this is something we work on, and we do that from the German perspective. And we are very happy to share your views, also in Romania, how you see it, in Spain, Portugal, every place, and we need to collect data. Thank you very much.
Thank you so much. Now I'm turning to Manuel, because we want also to see how it looks, the local projects of your association, and also what are you doing and how do you see your market, capital markets, of course.
First of all, thank you very much for the introduction and for the kind invitation to be here in this panel. Thank you to Bucharest Stock Exchange, to AFBR. It's a pleasure, obviously, to participate in this discussion with such panelists. Let me tell you that I'll take a different angle from Thorsten and tell you, basically, we are a small association, 250 people are the associates of APAF. It was founded 40 years ago, so it could be the father of the Association of Romania. This association was made when the capital markets was reacting to the new constitution that was made in '82 in Portugal, that allowed that we were free from the structure of a communist constitution that we had between '76 and '82, where no private money could be put in banking sector and other sectors. So this financial association was precisely the response of the community, of the economists community, from the banking community and the financial analysts community to a newborn market that already existed before the '74 revolution in Portugal. And that the scope of the association was to promote capital markets, to promote literacy, education, financial education, and since then it made its role of education, making partnerships with the universities, both in Porto and Lisbon, the two biggest cities in Portugal. And these two partnerships allowed that almost 1,000 CEFAs were awarded through these partnerships in the two universities. So one focus of the association has been to be a part of an ecosystem that allows people to understand better the equity capital markets, and for the financial analysts have stronger basis than they get out from the university. I don't know if it happens in Romania, but in Portugal, at my time, and if you do the normal degree, you didn't have too much education on financial markets. You knew a lot about public economy, a lot of macroeconomics, about microeconomics, but on financial markets, about equity valuation, bond valuation, and other subjects, it was not the subject of those courses. So we needed to upgrade the understanding of these ideas, and that was one of the main tasks, and I think it has been accomplished throughout the years. Another part, another major important part of the tasks that APAF is involved in is the task of public knowledge and comment to several legislation that both the regulator and the government puts forward on financial markets. That legislation that most affects the financial analysts, namely needs for certification, or needs in enrollment in special programs, or some kinds of decisions that affect the possibility of listing of companies, or affect the possibility of having Portuguese shares in the portfolios of the Portuguese asset managers, are decisions that have been commented throughout the years. So legislation from the Secretary of State of Finance or legislation from the regulator CMVM in Portugal is subject to public comments through a period. It's open to public comment through a period, and APAF regularly makes comments on that legislation. So it's a part of an ecosystem as I speak, because it only represents the financial analyst. It doesn't represent the banking industry. It doesn't represent the insurance industry. It doesn't represent the fund management industry. I have a role in the board of the Fund Management Association, but it is a different scope. Our scope is very much related to the individual. As a matter of fact, I think that we are, besides the Economists Bar, we are almost the only association that represents individuals and not corporations. We do not have relationship with in our founding members, we have no corporations. We represent the people and that are related with the financial markets. And for doing that job, we do a lot of networking events, seminars, webinars throughout the pandemic, and the most recent project has been the promotion of the SESGA in the same trend of education, but without the cooperation, the strong cooperation of the universities. SESGA has been a project done by APAF itself, put online, and with some higher professors making special sessions, but it is a different and completely role than it was in the past with the universities. So this is something that has been affecting the Portuguese market as a whole, promoting equity markets, but the fact is that there is no culture, despite having a capital markets since 84, but 82, the capital markets in Portugal have not increased its role in the financing of the economy as it should, and it's not so. It's even bad and worse than it is in Germany and in other countries. We have different periods throughout these 40 years, whereas the capital markets did play a major role. That was the privatization era when there were several IPOs in the 90s and early 2000. But since then, for different reasons, one of them is the fact that you may be aware that Portugal, since 2001 until 2014, was one of the 2 countries in Europe that grew the least, together with Italy. In fact, that lack of growth did not allow the capital markets to grow by themselves. It was a too indebted economy, and was one of the countries that was intervened by the Troika back 10 years ago. I think that new trends are emerging. There are a few IPOs planned for this year. Is something that is changing, but I think it's changing more in reaction to different monetary conditions, not for the changes in legislation that have started to be put forward. Namely, 1 month ago, a new legislation on asset management was put forward, which it's trying to get a different role for Lisbon and Porto as a hub for asset managers across Europe. What's the idea behind it? The idea behind it is that Luxembourg or Ireland are not very much different in many things from the financial ecosystem that we have in Portugal or in Spain or in Italy. But there is a big difference, is the ability of the regulator to be quick, efficient, and very transparent in solving the questions of the asset managers. And we hope that with this new legislation, the asset management industry in Portugal, which is around 21 billion euros, will have a different scope, with many asset managers coming to Portugal and potentially leaving other countries. Thank you.
Thank you, Manuel. Yes, of course we have, in Europe there are a lot of challenges and also opportunities. And now I'm turning to Radu. The topic that I wanted to put on the table is the Bucharest Stock Exchange Research Hub, because it's also close to what Thorsten said about the information, about what Manuel said about the financial literacy on the market. So what do you think about its role on the Romanian market? How do you see it? Because in my opinion, it's a key channel to connect issuers with investors by providing them information.
Indeed, at the end of the day, it's very nice to have a one-stop shop in which you can find, different research providers, equity research providers, giving their views on the listed stocks. Of course, the more diversified the presence, the more relevant, I would say, for both retail and institutional investors. On the other hand, I have to confess that the most interesting part for us as an institutional investor, as a pension fund, is ECG part, because at least we in BCR Pensii started to provide annual ECG reports in order to reflect, which is the orientation of our investment portfolio and the quality of the portfolio by ESG standards. And this is helping us a lot in terms of transparency and the quality of information that we get. So I think that that was a great step taken by the Romanian stock market, and it tends to be more and more relevant for the years to come.
Thank you, Radu. Juliana, now with you, I would like to debate a little bit on the current trends on the Romanian market, and after that, on the Germany and Portuguese market. As you know, BVB is currently building a competitive market in Central and European Union. Offers financing opportunities to the companies that want to attract investments from the Romanian capital market. And we position on an ambitious trajectory towards development and the growth prospects and optimistic. What are, in your opinion, the current trends of the Romanian capital market? And I mean, I'm referring here also to the IPO market, the SMEs, because it's a very, very focused trend, and the financing through the growth markets. We know very well that in the last years we have the new concept based on the regulations, the SMEs growth market, and not only the ESG financial instruments that are very, very used in the last day, and the trend is increasing.
Yeah, thank you, Ilana, for your questions. From the previous speeches, I noticed that the other exchange issues are somehow universal, without some exceptions. But I'd like to begin by remarking on the good progresses made by the local capital markets. And the most recent one is that starting with June 2023, Romania is represented by 11 companies in the MSCI indexes dedicated to frontier markets. Also, in 2022, the Bucharest Stock Exchange registered a record number of investors, an all-time high in value of the transaction, with well-balanced mixed in traded products, equity 58% and bond 42%. But on a less positive note, I have to mention that Bucharest Stock Exchange still struggles with a couple of old and unresolved issues, like lack of liquidity, limited number of companies listed on the platform, narrow range of products, and the absence of the central counterparty. I would say that this limited number of listed companies is also a result of the poor performance of the primary market activity, because after a peak registered in 2021, the primary market was completely absent. In 2022, at the beginning of this year, if we accept the single significant deal which was closed without success. However, for the forthcoming months, we expect that the much-awaited Hidroelectrica IPO, which has the potential to be one of the largest public offerings in Eastern Europe, to unlock the potential for the primary market, and to see other companies like Salrom, another company from the Fondul Proprietatea portfolio, to come to go public, and also companies from different industries like banking, renewable energy, or technology. You asked me about the SME financing, and we cannot speak about this topic without referring to the aero market, which is definitely one of the big achievements of the recent years. Even after the peak registered in 2021, the trading volumes were somehow more reduced, but it's still a viable financing alternative for the small and medium enterprises, and also an opportunity for the entrepreneurial companies to exercise transparency as a prerequisite for transfer to the main market. Yes, another trend which worth mentioned is the emphasis on the sustainability. The ESG financial instruments gained popularity during the recent years due to the some local banks which chose to meet their regulatory capital requirements by issuing green or sustainable bonds. Also, the international financial institutions present in Romania have actively promoted the ESG financial instruments and somehow encouraged the local institution investors to integrate in their strategies and investment policies principles of sustainable investing. I also have to mention the educational role assumed by the Bucharest Stock Exchange by publishing that ESG reporting guideline for listed companies, which is a helpful tool for local companies and help them navigate through this complex ESG framework. And for the future, I expect more issuers of ESG financial instruments from various industries, a wider range of products, and it's me also. I hope to see also the local municipality, particularly the city of Bucharest, trying to issue the green bond to co-finance the European funded sustainable projects. And also I expect the Ministry of Finance to continue to exercise its role to educate people and issuing a green or sustainable tranche under its bond program. So that is the near future as I see right now.
Thank you, Juliana. So thank you. The next questions addressed to Thorsten and Manuel, and also tackle a little bit what Juliana said. What are the current trends on your markets? We know very well that the listing legal framework should contribute to make listings more efficient and effective, empowering companies to list in Europe. We know that this is a big challenge, not only for Romania, but as I saw, also for you. So I will invite you to develop on this topic, Thorsten.
So we have the European Listing Act, which is in process right now, and what we are just about to implement in Germany, we will allow capital increases without issuing rights. Previously it was up to 10%. Now we will increase that up to 20%. So that will give companies a lot more flexibility in issuing money, which I think is good. On the other hand side, many asset managers are afraid that they might be diluted because 10% is a little less than 20%. But in favor of getting more flexibility for corporations and to increase capital, I think this is a good decision. The second topic we argue about in Germany is to have multiple voting rights with clear sunset clauses. So we think if you have young entrepreneurial companies, and that's a global trend, that they do not want to be diluted. They want to run the company for, let's say, another 5, 6, or even 10 years. So we will probably see the opportunity to have multiple voting rights in Germany, but the clear vote of DVFA is that we need to have clear sunset clauses, meaning maximum 5 or 6 years, but not forever and ever, because the capital markets, from our perspective, they work best when you have one share, one vote.
I mean, it's always a very tough question when we're talking about our country, and we don't want to stress the negative parts and try to find the positive parts. And the recent trends have been more attached to recent legislation, which has not borne its fruits yet. As I told before, we hope to have some IPOs in the coming 6 months that we were not used to have in Portugal. In fact, it has been a very dry market, the IPO market, and that stems from several causes. But I wouldn't say that we have many positive news. So instead of talking about the trends, I will share with you the question that the person that hired me firstly in my job put forward back many years ago. He said, "Do you know the difference between investment banking and commercial banking?" And as I was able to answer correctly, I got the job. And not so simple as that, but let me put it this way. When I was hiring people, I was always asking that. And it's a very important definition for all of us that work in capital markets to understand the big difference between the activities in investment banking and commercial banking. Commercial banking is heavy on assets, and it has a lot of people, but the people are more operational, let's put it this way. Investment banking has less people, no assets as a matter, it's a service provider, low capital requirements, and that means that this service provider is the core of, from my point of view, of capital markets. And that is one of the reasons why Europe is lagging behind the United States. The problem of the construction of the capital markets union in Europe stems a lot from the role that the commercial banking has in Europe, contrary to the role that commercial banking has in the United States. I find it interesting that there is a collusion between commercial banking, not to, from my perspective, not to allow the growth of the capital markets in Europe, because it's against their interests to have companies that are not listed. It's much easier, much more transparent, there is information available for lenders in the commercial banking that are not available if those companies are in the private area and not in the public area. We call, as an economist, I say a lot that there is a positive externality in the capital markets, and the state should recognize that public externality in capital markets and subsidize somehow the public markets, because it is good for stakeholders and the stakeholders are not only the shareholders. It is good for unions. It is good for workers. It is good for bankers. It is good for the tax authority. It is good for a lot of people that the information is available. The information that allows financial analysts to evaluate the companies is the same information that allows the tax authorities to see whether the company is doing what it should do in paying its taxes. It's the same that allows the trade unions to understand whether the job conditions that the companies are allowing. So equity markets have positive externalities, and it is not a coincidence if you look for the best and most liquid capital markets. What do you find? Probably the best and most rich countries in the world. We're talking about UK, we're talking about USA, we're talking about Switzerland, we're talking about, well, China is becoming a powerhouse, if it is not yet one of them. And so it's not a condition to be rich to have a capital market, but if you have a capital market, you have more possibilities of getting a richer country. So from that point of view, promoting SME access to the capital market should be a public policy, not just a work from the private sector. Should be incentivized. And in Portugal, and getting back to the question, in Portugal, the rise of the capital markets between 88 and 95 was huge because there were public policies addressed to allow that growth to happen. And at the same time, there was a privatization process where you put in the market those companies that were from the state, the cement companies, the highway companies, the electricity companies. We did the IPO of the electricity generator in '97, and it attracted 800,000 people. 8% of the Portuguese population bought shares at that time. But it was incentivized by the government. That lack of incentives disappeared in the 2000s and the early days. And what happened to the capital markets? It's almost dead in Portugal, as a matter of fact. So it's, I'm seeing your enthusiasm with this IPO, and I'm recalling about the story back then. It's very important to see the long-term story and think what is really important to focus on financing, because I used to say capital markets are not an end in itself. It's just a mean. It's just a mean to finance the economy. If you do just IPOs because the company wants to sell some shares at a very high valuation, it's not worthwhile. That company will not survive, and the stakeholders will lose at the end their ability to access the markets, which is bad on the long term. And that's one thing that the market has: memory. It has a lot of memory, and if you fail once, it's difficult that it allows you to get back a second time.
Thank you. One important concept was mentioned here a few times by Thorsten and also by you, and I'm referring here to the corporate governance. You know very well that this year is an important from this perspective, because we are waiting probably by the end of the year to be changed the corporate governance principle issued by G20. So after a consulting process by the end of this last year and also this year. So after 2015, when we had also the Paris Agreement regarding ESG. So from this point of view is very important, and I'm turning now to Iuliana to see what are the challenges and opportunities for the corporates, investors, stakeholders in relation to the proposed new direction. Stakeholders, an important topic that is very well addressed now within these principles. Iuliana?
Yeah. Well, the need to revise the principle adopted in 2015 has arisen following several factors. One of the factors is the declining number of listed companies. Along with the COVID-19 pandemic crisis, which exposes some weaknesses in corporate governance, especially the management of risk in supply chain or climate change. Therefore, one of the changes proposed by the new principles is for companies to include in their decision-making process the ESG considerations. That will require, of course, to develop new metrics and reporting framework, which will communicate adequately the sustainability performance. Of course, the principle should address or should align the reporting standards in order to ensure greater consistency and comparability of the sustainability reporting. This comes with a cost for the companies, but if they choose to comply with this new principle, then they have the chance to be more favorably viewed by the stakeholders and the investors, to get a better reputation and an easier access to capital, especially public equity in public equity markets. Another topic which is addressed by these changes is the digitalization, because the technology has a huge impact on the overall economy, on the global economy. And as an example, one of the use of technology is to increase, for example, the shareholders' engagement by facilitating their participation in remote shareholders meetings or remote votings. Of course, the new principles have to provide some rules for example, proper identification of shareholders participating in the meetings, and also to ensure the secrecy of their voting. Technology has also impacts on disclosure practices, also from the regulatory point of view, because it increases already the regulatory efficiency, and from the company's perspective, because it helps companies to make more accurate and easier and less costly market disclosures. There are more topics addressed by, I think there are 10 key areas addressed by the changes, by these changes, but yeah, we don't have enough time to debate on all of them. Well, the conclusion is that the new set of principles will have to ensure companies easier access to markets while not lowering the investor protection.
Thank you, Juliana. So we are approaching very quickly the end of our panel. That's why I would love to hear from you lessons learned from what happened in the last 3 years and still happening with the Ukraine war, from your perspectives, of course, and on your own markets. And also, I would like to have your views regarding the future of the Capital Markets Union version 2 project to provide effective financing and channels Europe savings. Radu?
I shall take the first one. As a pension fund manager, I'd say that we have a very clear view on ordinary people's perception and behavior in times of crisis. So our participants are ordinary people with no sophisticated financial education, and therefore, for us, to go through these crises, such as the pandemics or Ukrainian war, I think provide us with a pretty good mirror of how people behave in such times, and I think it's pretty much relevant for what we are discussing here, because the news are not so good actually, and it shows that people actually are not able to deal with volatility, which is a critical feature of the capital markets. I mean, we can dream for years about having more people in the capital markets, but if people are not used to deal with volatility and accept volatility, it means they are not prepared to be there, and they will not be there. Because I'm not talking about the calls we were getting in these times, but I'm talking about many people who withdrew their savings from investment funds. In the pension funds, they cannot take out their money until they are 60 or above. But in investment funds, they were able to withdraw their money right away, and they took huge losses just because they got scared. And they actually, moved from unrealized losses to realized losses in what they did. So for me, a lesson which I drew was that we as professionals have to do much more to explain volatility, period. I mean, the first page of any financial education I would do would be to start to talk about volatility and what it means. Nothing else. And that volatility is normal, and it's part of the rule of the game being there in the capital markets. Otherwise, we are not going to get people there. And I have to say, if for us the lesson was that we have to to be more persuasive with people in explaining this, I fear that for some people the lesson was, look how risky the stock exchange is. And we have to really consider that, because at the end of the day, we tend here as professionals somehow in our ivory tower to think that the stock exchange is about procedures, processes, information, and so on and so forth. Well, I think the stock exchange future is equally related, or even more importantly related, to culture and politics, right? So if people culturally, Europeans, because we talk so much about Europe versus US, if Europeans are more risk averse, then we are not going to see them on the stock market as much as we see the Americans. So what do you do about it? And if we should do something about it, because maybe this is who we are, and we are, let's say, somehow condemned not to be as present on the stock market as the American. It's equally about politics, maybe even more so in Romania, because we know that traditionally the Romanian state never had a huge appetite for listings. Even now, we talk about fewer listings of Fondul Proprietatea, which is symptomatic for the situation in which we are. Hidroelectrica is a listing of Fondul Proprietatea, not of the Romanian state. So I would say, the point I'm trying to make, and I'm ending here, is that let's not be obsessed only with the technicalities of the stock markets, but look to the, let's say, the other factors which are not so technical, which actually influence a lot the future of stock markets, which is culture and politics.
Yeah, I follow on the Radu comments. because the lessons learned from this very strange period of having the COVID and not having ended the COVID in China, there was already an invasion of Ukraine. We're waiting for the extraterrestrial people landing in Earth now. After these two shocks, there will be certainly a new third shock that will be as strange as the last two ones. But following on Radu's comments, the idea is that more education is needed, clearly. And when we were meeting with the financial authorities throughout this period, they were very worried about how the market would react. If they were screening our in our asset management units, they were screening liquidity. They were looking if the assets we had were able to be sold in the next day, if we had enough money to pay the redemptions. And I wouldn't say we were very relaxed, but we had the lessons from this situation that was new in this context was already understood by the Portuguese asset management industry some years ago, when we had the Troika intervention, which made a huge outflow of assets from the asset management unit at that time, between 2011 and 2015. Those 4 years of intervention, when the three institutions lent Portugal 84 billion euros for paying foreign debts. Since we learned the lessons back then, the institutions between the asset managers and distributors were more prepared for these shocks. And as a matter of fact, didn't happen what Radu was describing in Portugal. We didn't have massive outflows, not minor outflows. There was, as the risk perception was increased, there was a change in the asset allocation. There were people switching within their portfolios for less aggressive portfolios to more defensive portfolios, but there wasn't outflows from the real estate funds, for instance, and from the pure equity funds. It was more in the balanced funds that there was some changes. So I would say that there is more resilience if the people understand what they are investing in. And to understand what they invest in, you must have proper education, financial education, not by the asset managers necessarily, but by the distributors, by the people that talk with the final client, with the people that sell the fund, that sell the share, that sell the bond, and says, look, you're buying this because you're able to withstand this product for the next 5 years, irrespective of this product going up and down, because it will go up and down. It's a certainty of life. It will not be a straight line. And in 5 years, we can talk about, have you realized the return that you wanted? Do you want to stay more 5 years? And each client is different. So it's very important for the distributors, for those that talk with the investors, having the right profiling of the investors. The retail investor is completely different from the institutional investor. The professional investor knows the risks. The retail investor somehow believes that exists the Santa Claus, and they will have a huge return without risk. If there are huge returns, there are huge risks. That's a fact of life. And the retail investor believes that if a stock has increased 10% in the last month, it will return 10% in next month. So it's very short-termist. So it's very important to have this education, these comments from the institutions that have the relationship with the client. And that is very important to have people that have certifications, people that have abilities to communicate the risks and not only the returns. To understand the volatility concept is obviously important in the retail sector. Just a final word for institutionals. In Europe, the institutional assets, the total assets under management in the institutional world is not so huge as the United States. And that makes also a difference, because if we would have savings in Europe that would allow for stronger capital markets, the markets wouldn't be as volatile sometimes. You can see easily the comparison between the volatility in the United States and the volatility in Europe, in futures or whatever you take. It's, I don't know the ratio, but it's much higher, the European volatility, and that the reason for that is because you don't have the institutional money to support markets when they have this strange movement sometimes.
Thank you, Thorsten. And then Juliana, and we will end.
Okay, so let me just put one more topic onto the table, and this is long term. So if we want to have liquid capital markets, we need money. It's simple as that. And looking at the insurance industry, they have very, very long life insurance. They have very, very long obligations, 30 years, which ideally fits to listed equity, because volatility is just short-term, return is long-term. So my impression is, and I also discussed that with insurance specialists, the regulation for the European insurance industry, which is Solvency II, obviously is over-regulating the insurance sector. The equity investments of the insurance sector across Europe has come down during the last 20 years. They're investing in bonds. But this is something that has to do with the financial architecture in Europe, and we need to discuss that. And this is, of course, very, very heavy stuff, because this is a regulation that goes very, very deep into investment processes. But if we really want to improve our capital markets in Europe, we need to have insurance industry coming back. And the second step, of course, is state pensions also should have an equity portion, a long-term equity portion, because then we will have a constant flow of money into capital markets that will give more certainty to corporates that they will get funding for the investments needed. And this is, I think, a key that we should really pursue in Europe. Thank you.
Thank you.
A couple of words about the Capital Market Union projects, because my colleagues, and especially Radu, tackle the consequences of the war on the capital markets and investors. Regarding this idea of having a single market, I think for Romania has the potential to impact very positively, because the Romanian companies will access funding from investors across the Europe, because I told you previously that a weakness of our stock exchange is the lack of liquidity. And also for investors, on the investor side, they will be provided with a wider range of investment products, probably lower costs, derived from the reduced regulatory barriers and increasing of competition among the financial services providers, and also that European single access point, which will provide easy digital access to investors available for free. That would be a good idea, to have access to information about companies, financial information and sustainability related information about companies all over Europe. And also the educational component of the capital market union will impact positively by increasing the financial literacy of the Romanian investors, and also having a positive impact on the Romanian economy, because probably will attract more investments, which will contribute to growth of the economy and probably will create more jobs here in the local market.
Thank you, Iliana. Dear panelists, so we are at the end of our panel of today. Thank you. Thank you for being today with us. Thank you for your wonderful insights, and also so complex. We touched many perspectives, many approaches from different perspectives. So thank you so much. Thank you all. Thank you for the audience. And I wish you a good day and a lot of success in your activities.